Anything which is purchased before 2001, for everything we consider a standard year of 2001. Government has given you permission, you can take exemption if you are invested again from your profit. All the depreciable asset will be considered as short term, no indexation. Warm welcome to one and all. This is your Alasar here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. Now we are in the session 3, unit 2 of topic called tax management, and we are discussing the major topic, that is capital gain. We are done with all your theory concept and now we are starting your practical problems. Now, if you have not watched your session 1 and session 2, please go back and watch those 2 sessions, because without theory you cannot solve your tax problems. So we'll go for your today's session. So your agenda is very simple, problems on capital gains. In this, during the year ended 31st March 2020, Mr. John, a resident, sold the following asset. Now, so these are the information we have. According to this, we are supposed to find out your capital gain. Now, as I told you, there are 6 points are there. Means how many problems you have in this? You have 6 problems in single question. Very small, short, and remember the short term and long term. What is the concept? Concept is very simple. If it is a movable, 36 months. If it is a immovable, 24 months. Up to 24 short term, above 24 long term. If there are shares, equity shares, 12 months. Unlisted equity shares, 24 months. If it is a debt equity shares, 36 months. Hope you are clear. This much only classification month we have. Clear? Now, so we'll go one by one. We'll not read second, third, fourth, fifth, 5, 6 while doing one. We'll go one by one, which are not interconnected. All are individual questions. Now, agricultural land in Mysuru urban city purchased in 2001. See, the indexation, remember, if it is a long term, we go for indexation. Anything which is purchased before 2001, everything we should consider 2001 itself. For example, you purchased in 1960, but we take indexation of 2001 only. You purchased on 1940, again we go indexation of 2001. In the 2001 is a standard one. 2000 onwards, whatever year they have given, we are supposed to consider. I'll make it clear. Anything is purchased in 1995, take 2001. Anything is purchased 1985, take 2001. Anything which is purchased before 2001, for everything we consider a standard year of 2001. In case purchased in 2004, then which year we should consider? 2004 itself. On or after 2001, anything is purchased, the actual date only we consider. On before 2001, anything is purchased, we consider standard year of 2001. Hope you are clear? Clear? Yes. Write down all these points. It is very important. Now, purchased in 2001, we consider 2001 itself. Now, 20,000. At what price you purchased? 20,000. But anything which is purchased before or on 2001, along with purchase price, the government will give you fair value also. Government will give you fair value. So always remember, the actual cost of purchase or government given rate, fair value, whichever is greater, we should consider, because that is a benefit for us. If you take more value, your tax will be less. Now, agricultural land purchased, for what price it is purchased? 2,000. But what is the fair value? 30,000. Will you consider 20,000 or 30,000? Always go for greater one. Your purchase price, even though 20,000, we should consider 30,000. Hope you are clear. Yes. What is your purchase price now? Not 20. Your purchase price is 30,000. Now, at what price you sold? 5,60,000 you sold. You know the format. It is a long term or short term. See, from 2001 to 2020, almost 20 years. Long term or short term? It is a long term. We should do indexation. Yes, we should do indexation. Clear? I'll go to answer. Remember, your selling price is 5,60,000 and your purchase price, you have two rates, 20,000 and 30,000. We should go for greater one. We'll go for 30,000. Now, and every problem, your indexation number I told you. In the previous class, I told you the income tax itself will give you indexation number. What is the indexation number? See, your indexation number is 289. This is common. Every problem you should consider 289. Hope you are clear. Good. Now we'll go to the answer. First one. Agricultural land. It is a long term. Why? Because more than 2 years. Now, at what price it is sold? 5,60,000. It is sold. Less. Transfer expenses. Have you paid any commission? I'll go back to question. No information about commission. Now, your commission or transfer expenses, 0. 5,60,000 will become 5,60,000. Net consideration is 5,60,000. Now, minus sale consideration is over. Indexation cost of acquisition. Now, what happened? In the previous session, I'll explain you. Your selling price is 5,60,000. In 2001, you purchased at what price? 20 will become 30 because fair value. You are supposed to pay tax on 5,30,000. But government has given you permission. In 2001, the value was 30. But now if you come to the current market value, your 30,000 money value will increase. See, in 2001, the 30,000 whatever you spent, that time it was a huge amount for you. Now you may feel that, oh, 30,000 is a small amount. But 20 years back, that 30,000 is a huge amount. Similarly, the government will give indexation value. The 30,000 20 years back, what is the price now? What is the price now? We'll convert. How to convert? Simple. Take 20,000 or 30, whichever is higher, 30,000 into, what is the common indexation number? 289 divided by given in the question itself, divided by 100. Clear? Divided by 100. Now, see calculation. Your value is 30,000 multiplied with 289 divided by 100. If you do all this calculation, your 30,000 will become 86,700. Your 30,000 will become 86,700. So, from 5,60,000 minus 86,700, your answer is 4,73,300. Hope you are clear. Now, see, earlier it was you are supposed to pay tax on 5,30,000. After applying indexation, it has become only 4,73,000. Almost you are saved. Now, have you purchased any new agricultural land? No. So, there is no exemptions. You are supposed to pay tax on 4,73,300. Taxable long-term capital gain 4,73,000. Hope you are clear. Yes. Now, your agriculture answer is done. Now, we'll go back for the first one. Your first one is done. Machinery purchased in 2019. When it was purchased? 19. When you are selling? 2021. Means just 1.5 year. 1.5 year means long term or short term? Short term. Now, what is the selling price? If it is a short term, indexation will come? No. Indexation will come only for long term. Now, your selling price is 30. Purchase price is 25. 30 minus 25, 5,000 is taxable. Easy. I'll go to the answer. Machinery, it is a short-term capital asset and selling price is 30. There is no commission you paid, 30,000 minus your cost is 25. There is no improvements, 25. 30 minus 25, 5,000 is your short-term capital gain. Same thing you have repeated. Your taxable short-term capital gain is 5,000. Hope you are clear. The same 5,000 I have written again. So gross short-term, your answer I have written as taxable short-term capital gain. Hope you are clear. Good. Your second one is easy and we completed. Third one. Furniture purchased on 2019. Again, it is a short term. Why? Because 19 to 20 is just 1 year. Now, sold at 3,800, purchased at 2,500. 3,800 minus 2,500, difference is your short term capital gain. See, furniture 3,800 minus 2,500, your answer is 1,300. Taxable short-term capital gain is 1,300. Hope you are clear. Good. We'll go for the fourth one. Third one also completed. We'll go for the fourth. Machinery purchased on CII, cost of inflation index. I'll write CII stands for cost of inflation index. Clear? Wherever the question talks about long term, remember, easy to find out whether it is a long term or short term. See, in the question they have mentioned CII, it is a long term. If they have not mentioned CII, it is a short term. Clear? Unless and until it is a long term, they will not give you this information. Now, in 2013-14, purchase for 50,000 and you're selling for what price? 60,000. Now, again, I'll come back. Machinery purchased on 13-14 at what price? 50,000. But WDV means what? Depreciation. One more thing, please write down. If there is depreciation for that asset, if there is depreciation for that asset, it is always short term. This is always short term. Even though it is 7 to 8 years, still we consider as short term. Why? Because we have calculated depreciation. Hope you are clear. Important point, write down. Even though it is long term, if we have done depreciation to that particular asset, always we should consider this as short term. We don't take indexation even though it is long term. If the WDV is not there, then we can go for indexation. Hope you are clear. All the depreciable asset will be considered as short term. No indexation. Now, so this indexation is not required. Why? Because there is a WDV. Now, so 50,000. Now the WDV value is 35. Don't go for the greater value. WDV always you should consider this only. 35. Your selling price is 60 and your WDV is 35. Clear? Selling price 60, WDV is 35. This is not fair value. If it is fair value, we go for the greater one. This is what? WDV value. WDV value, we should go the least price only. Now, 60,000 minus 35, the difference 25 will be taxable. So, we'll go for the answer. See, 60,000 minus nil, 60, there is no commission, and 35,000 is your cost, this thing only. And 35, 60 minus 35, you will get how much? 25. Same 25 I have written. There is no exemption. There is 54, 54B. If they have purchased anything, then we are supposed to do. They have not done any additional purchase. Now, we have completed fourth one also. So your fourth one is completed. We'll go for the fifth one. Now, shop purchased in 2006 and 7. See, long term for 50,000. It was purchased for 50,000, but what price it is sold? 4,50,000. Apply indexation, your cost will increase. We'll do that. Now, 4,50,000 selling price, 50,000 is your buying price. Selling price 4,50,000. There is no commission. It will become 4,50,000 only. Indexation. Take 50,000. As I told you, 289 is common for every problem. In your examination also, you should consider 289. Every problem, if it is a long term. Divide by 122. Why it is 122? I'll go back to question. See, they have given, what is the indexation? 122. What is the indexation for the first one? 100. They will mention the indexation. That indexation number only we should consider 122. So apply this 122. Your 50,000 7 to 8 years back. Now it will become how much? 1,18,000. 4,50,000 minus 1,18,000. You are supposed to pay tax on 3,31,000 because you spent this 50,000 almost how many years back? 2006, 14 years back. 14 years back, 50,000. Now it is worth of 1,18,000. So your tax is reduced. If you don't apply indexation, then 4,50,000 minus 50,000, you're supposed to pay tax on 4 lakh. If you apply indexation, you're supposed to pay tax only on 3,31,000. Your tax is reduced. Now you may have the question, sir, whether it is compulsory to take indexation. It is optional. Government has given permission. If you feel that no, I want to pay more tax, then you are not supposed to take indexation. You can pay more tax. Government always happy if you pay more tax, but they have given permission to take this advantage. Now, so we have done with your fifth one also. We'll go for the last one, that is the sixth one. See, all are individual problem. Now, one residential house. Remember, residential house means section what? 54. What is the section? 54. In the previous session, I told you residential house. Remember, residential house purchased in 2008 and 9. 8 and 9 means what? Long term. Now, at what price it is purchased? 60,000. What is the indexation number? 137 divided by 137. Remember. And what is the selling price? 5,80,000. Now, I'll go to the answer. 5,80,000 your selling price, your transfer expenses nil, minus indexation, your cost into 289 is common, divided by 137 given in the question. So how much it is? 1,26,000. 60,000 will become 1,26,000. Now, 5,80,000 minus 1,26,000, you got 4,53,431. Up to this, any doubt? Hope there is no doubt. I'll go back to question. So after selling this, he bought one more house for 2 lakh. He bought one more residential house for how many value? What is the value? 2 lakh. As I told you. So if you are not attending the previous session, please watch that. You will understand why we are taking this 2 lakh, because I explained there what is section 54. What is section 54 means? Whatever the amount you invested again, that can be claimed from your tax. Hope you are clear. You can avoid tax by taking this 2 lakh. I'll show you that. Say 5,80,000 minus 1,26,000. You are supposed to pay tax on what value? 4,53,000. But you spend 2 lakh for new house. That 2 lakh you minus, pay tax only on 2,53,000. Hope you are clear. Government has given you permission. You can take exemption if you are invested again from your profit. Hope you are clear. Good. This is all about your capital gain of your all 6 points. Now, I'll go back to your previous slide. Please work out this problem at your home without seeing answer so that you can understand better. Problem number 1, total 6 points. Answer for first point. Answer for second. Answer for third. Answer for fourth. Answer for fifth. Answer for sixth. So this is all about your today's session. Hope you understood all the 6 points we worked out. This is only your capital gain. Easy, very easy. Very easy it is. Why? Because you concentrated first 2 sessions. That is the reason it is easy. So we'll meet in the next session. Thank you.